Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
Well, we're going to talk about whether or not gold's uptrend is helping the resource juniors, and we're going to explore the implication of Centerra's decision to not proceed further with the Goldfield project in Nevada.
Well, is the gold uptrend starting to help out the resource juniors?
You know, gold is bumping at $3,000. It may break through in the next week or so. Hard to tell, but it is not having any effect on the resource juniors. There is still a suspicion that we're going to have another gotcha, such as we did back in 2008, 2013, 2020. And in early 2022, where it looks like gold is going to be up and away, and then boom, it crashes back to a lower level and then just tracks sideways. So this is a cry wolf syndrome situation where retail investors, the kind that are interested in resource juniors, just aren't buying the gold uptrend. My KRO favorites index, which had a half-decent start in the year, was up 10% at one point. It's now back up only 1.6% compared to the TSX Venture Index, up 2.6%. And compare that to gold, up 13.9% just for the year alone. My bottom fish index, which has 108 juniors compared to 22 in the favorites index, it's up 23.1% for the year. But that's largely due to a handful of juniors such as A-Mark Resources and TDG Gold Corp, which have benefited from the Aurora discovery in the Toodoggone district of northern British Columbia. Both of them have graduated to the favorites index, where the recent pullback has helped drag that index down. Another sign of that retail investors are not buying the gold uptrend is in the daily traded value of the resource listings on the TSX Venture. It was off to a good start for the new year after a dismal December, but it stalled around mid-February and has retreated to lower levels. It's as if the PDAC curse is in operation this year. The PDAC curse, for those who don't know, PDAC is the conference that happens at the start of March every year, the big international mining conference. There's a historical pattern that the resource juniors do very well leading up to the PDAC convention, and then they develop a downtrend afterwards that only rarely is ever violent. Once in a while, it actually continues right into the summer, blazing past the sell in May and go away obstacle course. So the past week, of course, has been not a good week for general equity markets and for cryptocurrencies, which is supposed to be good for resource juniors. But today on Friday, crypto and the general markets rallied. We'll see if that continues. There is a growing concern that the erratic flip-flopping policies of the Trump administration are going to cause all kinds of economic harm, plus the alienation of everybody else by Trump's attitude. Thuggishness is making everybody very concerned. How is a globally functioning economy going to work out? Now, one group that has benefited from gold's uptrend are the gold producers. They're doing very well. The 2020 Gold Producer Index that I set at or created on December 31st, 2019, it's up 21.1% for the year compared to gold's 13.9%. And of the 38 producers, and these are companies producing at least 100,000 ounces gold annually, 10 of them are up more than 30% this year. This is like only two and a half months. And Goldfields is the biggest gainer, up 57.2%. The one I watch very closely is Agnico Eagle Mines, and it's symbolic because around 2020, the role of the gold producer as a leveraged proxy for the price of gold, that reversed. Agnico Eagle since then has been its index has been trading below the gold index. But this past week, it charged up and is threatening to break the gold trend line. So from that beginning of December 2019, the gold is up 95.3%, and Agnico Eagle, its index, is up 92.7%. And that's the symbol that I'm watching for, is when the gold producers such as Agnico Eagle break through and start to outperform the gold uptrend. Now, one advantage that the producers have over the resource juniors is that even though we have no idea when retail investors will start to believe that the price of gold is sustainable, that it'll stay at these levels or continue to go higher. But the producers, if they haven't forward sold all their gold in past years at much lower prices, they are going to be selling gold at spot prices. And with the futures curve, the COMEX futures curve that the World Gold Council publishes, projecting $3,400 gold over the next 6 years. If they forward sell now, they will be able to really deliver a lot of cash flow. So one of the things we're going to be seeing this year, a fantastic earnings report from these gold producers, and that's why they are starting to outperform the price of gold. What will it take for retail investors and even the institutional investors to start looking at the resource juniors? Well, unfortunately, it probably will require a crash in the equity markets and also the crypto markets. If they tank and gold doesn't tank along with it, that will be an extremely bullish signal. Meanwhile, the bottom fish collection that I've got, the 108 companies and growing, it is the best one I've ever created, especially if you believe we are on the threshold of a secular gold bull market that will be running many years. I'd like to remind everybody that the KRO individual membership is still available at $450 US for the rest of the year, gives you access to everything, but that ends after March 31st, 2025, when it becomes a pro membership that costs $200 per month. Now, maybe everybody can afford that a year from now when we are in a raging bull market. But if you want to see what's in the bottom fish collection and read my comments, now would be a good time to sign up for that $450 membership and be grandfathered to renew in subsequent years, which will be very lucrative if we do indeed get that inflection, finally have a resource junior bull market.
Is Centerra's decision to write down Goldfields good or bad for Westfault Mining?
Westfault Mining is my sort of small-scale, shovel-ready gold project waiting to be acquired by a producer to be developed. It's way in the money at current gold prices, and yet the market is treating it as though this project has zero chance of ever being developed. It's related to Centerra Gold because in 2022, Centerra Gold acquired the Goldfields project about 30 kilometers to the south next to the town of Goldfield, and it paid $207 million US for that. And that came in two stages. The first stage was 175 million US cash, and the second stage was $31.5 million also cash within 18 months of September 2023. It paid that. So it paid $207 million to Waterton to own 100% of this project. Waterton itself acquired this project in 2015 when it did a hostile takeover bid for Chaparral Gold Corp. Now, Chaparral Gold Corp was created in 2013 to hold the Goldfield project when International Minerals Corp was taken over by Hochschild for its Peruvian higher grade assets. They weren't interested in a low grade Nevada project, so that was spun out. And International Minerals had acquired the Goldfield project in 2010 when it took over Metallic Ventures Corp. And this project in 2013, International Minerals had or the Chaparral Gold Corp, they had done a feasibility study on it. It was less than 500,000 ounces. It wasn't a great project, but the company did have a lot of cash in it, and Waterton did a hostile bid, and it managed to acquire the company for just a little bit more than its cash breakup value. So it ended up acquiring this Goldfield project for next to nothing. The problem with the Goldfield project is that Highway 95 went right through it. So Waterton spent, apparently, I've heard different numbers, but one of them is $6 million to get the highway moved so that it bends around the location where this deposit would be developed as an open pit heap leachable deposit. Now, the bad news that came out on February 20th from Centerra Gold was buried inside its annual resource estimate update. All these producers, what they do for the end of each year, they update what's left in terms of reserves and resources, proven, probable, indicated, measured, and inferred. And buried inside there was the bad news, the maiden resource estimate. Now, maiden only in the sense that Centerra generated it with its data. It has had resource estimates in the past, but this was Centerra's own. And it came out quite disappointing, about 30.8 million tons of 0.71 gram per ton gold, and it was limited to the oxide and transition ore that can be heap leached. The recovery that they stated is 67%, and they used $2,000 gold to establish the cutoff grade. So here you have about 704,000 in situ ounces, of which only 471,000 would be recoverable over the life of the mine at that projected 67% recovery. This type of outcome is below the minimum development threshold that Centerra wants. So the bombshell it dropped was it wrote off of almost 194 million US. And basically said that this thing, it's not worth developing. They kept it on the books at $21.5 million as fair value. So that's about $50 per ounce. And that's a metric that they get from comparing how the market's valuing other ounces in the ground. They appear to have spent $40 million delineating the system, redoing the numbers, and hitting the rest of the property very hard for additional zones that could be all pooled into this central mining operation. But that $40 million seems to have been expensed rather than capitalized. So what's left on the books now is $21.5 million, and they indicated they're going to look at their strategic options. Now, what are their strategic options? Well, I've heard on the street that they would love to find another 200,000 ounces in the vicinity, and then they would continue developing this project. They have not done any economic studies. It never went to that stage because they wanted to see the critical mass first. A second option is that they sell it to somebody else who is interested in, developing smaller deposits. And the third option is that they might end up perhaps acquiring Hasbrook, Westfault for the Hasbrook, and develop that, combine the two. But they haven't really signaled that. So in that sense, all of this is bad news for Westfault, because the hope had been that if Centerra develops the Goldfield project, it has a footprint in the southern part of Nevada and will want to expand it. Market didn't quite expect the resource to be this small, but in another sense, it's good news for Westfault and its Hasbrook project, because Hasbrook would have 561,000 ounces recoverable. The grade is a little lower, 0.51 gram per ton rather than 0.71 gram per ton. And it would produce about 70,000 ounces for over an 8-year mine life. And the thing is, it's permitted. The costs are based on early 2023. And when you plug in $3,000 gold, you end up with numbers of like $10 to $14 after-tax NPV per share at the current exchange rate using 10% and 5% discount rates. And the stock is right now trading $5, $10, again, as if nothing is ever going to happen. So what's quite possible is that even a third party can see that, okay, the Goldfield assets down there with 500,000 ounces, it's not the one you would want to develop first. Hasbrook is ready to develop, so maybe somebody else will come in there and acquire Westvault with the intention of acquiring the Gemfield deposit of Centerra. How this will all play out, I do not know. But rather than this being bad news, I think it's good news. It also clears the deck for Centerra to, stop pretending that acquiring Goldfield was a smart decision. And remember, they used $2,000 gold in all their assumption. What if $3,000 gold is the new reality? It might make quite a difference for all these projects. So again, Westvault Mining is a favorite because it is very leveraged to the market believing that $3,000 gold is a new reality with only modest inflation down the road. And even if inflation does rear its head, I think in the current context, it will probably make gold rise even faster.
What does Centerra's Goldfield decision mean for Silver Range's East Goldfield project?
So Silver Range Resources and Westvault Mining are basically the opposite ends of the spectrum from a project, ounce in the ground project that's shovel ready, permitted, water rights in place, everything there. That's Westvault's Hasbrook project, 30 kilometers north of Goldfield. And Silver Range Resources is a prospect generator junior, which specializes in researching old archives, walking around in the field, looking for systems, staking claims, and trying to farm them out to others. Now, one of the properties that it has is East Goldfield, and it is about 4 kilometers east of the town of Goldfield. It's a smallish property, about 2 kilometers by 3 kilometers, and what it covers is a quartz alunite, kaolinite alteration system, and you see this from hyperspectral data from satellites, and they've got a map on their property showing what it all looks like for this region. You can see the area where the Gemfield deposit is, where the McMahon Ridge deposit of Centerra is located, and this whole sort of east-west trend of which Silver Range owns the eastern portion. So 2 good things have happened recently. The first is that the word on the street that Centerra would love to find another couple 100,000 ounces. Well, where's it going to find that? Probably not on its property because it hit it really hard, and as the press release glumly stated, no significant results. So I don't think there's much open pitable left to be found. Now, the area there is a deposit called Goldfield Main, which is just east of the town. It's an underground system, has been underground mine that's riddled with old workings. It's high sulfidation epithermal gold system, and it's got lots of sulfides in it, and it's a nightmare. Nothing can ever be done with it because trying to build new stopes and adits and that in this mess of old ones, and plus dealing with the metallurgy, not going to happen. It's basically just a geological curiosity. But in farther east, where Silver Range has the East Goldfield project, this apparently, it's the same sort of high sulfidation epithermal gold system, and it's been oxidized very, very deep. It's from whatever limits that have been tested by past drilling. It is well above the water table, so you don't have problems with that. And what's interesting is this project has had many, many holes in it. But in America, unlike in Canada, where, as part of your right to stake claims and do exploration on it and get to keep a deposit if you find it, you have to file the work that you did, assessment work that goes into the public domain. This is not the case in the United States. Any money you spend exploring your property, that data, that information is your property. You can do with as you please. There's no repository into which it has to be filed so that when you eventually drop the claims, that information is there for others to research, to digitize and try and rethink this old prospect that disappointed the previous explorers. And it turns out that, I believe it was in the 90s, Granges, which was a big explorer in North America, it drilled about 69 holes in this East Goldfield area. And the problem with these high sulfidation epithermal systems is that the gold ends up in all kinds of erratic places, so it's very difficult to delineate any mineralization. But the luck that John Gilbert and Mike Power had is that when people who own this data or corporations that own it, maybe the private owner passes away, the estate finds all these boxes in the basement, or the old corporation cleans out its warehouse, they often donate these boxes of paper-based data to it's almost like Goodwill shop type places. Here's information. Can you do something with it? If not, just throw it in the garbage, whatever. Well, John and Mike, they're also data hounds. They scavenge for information, and they appear to have lucked onto the data set, the paper data set of those 69 holes that Granges drilled 30 or more years ago, and they're now busy compiling it. Now, they can't do a resource estimate out of this. Now, remember, back in the 90s, gold was down $350 or so, but they can internally put this all together, and they know that the source of this data was competent, so this is not going to be junk data that you can't rely on, but they will know where to drill to find the mineralization reconstituted in 43-101 form, and possibly in this oxidized area, they will very cheaply be able to demonstrate, there's another couple 100,000 ounce potential. So there may be a deal possible. It's probably not going to be big enough there for this to be a standalone, but if Centerra is indeed looking to acquire some additional couple 100,000 ounces so that it can sell this whole thing as a package, well, here's a way that Silver Range might be able to monetize this project. Now, incidentally, John Gilbert has left Silver Range. He's become CEO of one of my other members of my bottom fish collection, GGL Gold Corp. It owns the Gold Point project, which is another sort of 15 kilometers or so south of Goldfield. They've been working on this several years. It's an orogenic high-grade gold system that they've optioned from a private party. They're trying to sort out the high-grade potential. And this group is also part of the Doug Eaton Strategic Metals Group, from which it was spun out. Silver Range was also spun out. So it's kind of almost like a family type thing. And they optioned the EGP claims, East Gold Point claims, from Silver Range a number of years ago to expand the property out into the flats away from where the old workings are. So GGL doesn't have much money. John Gilbert will have to raise some money. I'm going to try and get the story out there. I like the location. I like the whole context. If we get into a gold bull market, this type of play will attract a lot of attention. But there's something else that's special about GGL Gold Corp. And this is the project called McConnell. It's south of the Chemist project in the Toodoggone district of British Columbia. The company has owned it since the late 70s when it was called Gurley Gold. Not much has ever been done with it. It reminds me a bit of the Baker Shasta, except Baker Shasta has, epithermal gold, 1.3 million gold equivalent ounces already delineated and had even underwent some mining. But it's a similar context where exploration has focused on the epithermal gold showings, not a huge amount of work done. You go across the valley, and there's some minimal work being done on a copper-gold potential porphyry center. And now that we're looking at the Toodoggone district as a rethink, where these epithermal systems appear to be related to gold-copper systems, have never really been looked at. This is the big story with TDG Gold Corp and in the Shasta area, where it's just west of where A-Mark and Freeport on the Joy property made the Aurora discovery, which is something new and different for that region, a very high gold grade, 5 times what is present in the Chemes project. And so this McConnell project, which has sat in this GGL company for all these decades, suddenly might be of interest. It's not huge interest quite yet because the whole Tudagon district rethink play still has to hit critical mass. But by summer, that could be underway when TDG starts drilling on its property to the west of Aurora, and A-Mark and Freeport resume drilling on the Joy to figure out what exactly is all going on there. And while John Gilbert's more a sort of a southwestern U.S. expert and doesn't have much experience with British Columbia, they do have as president David Kelch, who has plenty of experience in this area. So GGL, little bottom fish at 6-7 cents. It has a dual story underway. They don't need to spend any money on the McConnell. They just need to wait for interest to grow on that and people to understand what the story there is, and then get perhaps a strong farm out down the road. And ironically, it could even be Centerra, which options that because it's got the Chemes project. And now that everybody's rethinking everything in the Tudagon district, why not Centerra do a deal with the with GGL on the McConnell project? And of course, Gold Point itself, if it ends up being something that's bulk tonnage, that might be of interest to Centerra also. Anyways, this is all part of my bottom fish collection. I'm mentioning it here as a bit of a treat to the Substack watchers and readers. But again, as I said before, get on board with the $450 US for the rest of the year to be part of the entire KaiserResearch.com system, where you have access to the entire bottom fish collection for 2025.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at KaiserResearch.com.